Before we get into today's edition of Dividend Dive, I have a question for you. Are you tired of getting paid pennies and interest on your savings account? Me too. That's why I listen to Dividend Dive, the high-yield dividend stock show that'll make your wallet say thank you. But, did you ever want even more insight into high-yield dividend stocks? Or better yet, would you like to get rid of ads like this one, so you only hear the actual episode with no ads at all? With our Patreon membership, you'll get access to exclusive benefits, including ad-free episodes, digital stock pick summaries, and live Q&As with our team. Plus, you can join our private community on Discord, where you can talk about dividend stocks and share your own investing tips. So, what are you waiting for? Join the Dividend Dive Patreon community today, and let's make some money. Go to Patreon/Dividend Dive. That's Patreon/Dividend Dive. Or just click the link in the description of this episode, and thanks for your continued support of our team. Now here is what you came for. It's time to dive in. Welcome to episode 4 of Dividend Dive. Today we're going to be discussing an interesting investment opportunity that people sometimes don't appreciate: Treasury bonds. But trust us, it is not as boring as it seems, and that's why wait for it. Deep breath. Inhale. iShares 20+ year Treasury bond. BuyWrite strategy exchange traded fund. Wow, that was a mouthful. With a stock symbol of TLTW. It is our high-yield dividend stock of interest today. So, without further ado, let's dive into the details. TLTW is an exchange-traded fund, or as we stated, ETF for short, that tracks the performance of the Intercontinental Exchange's US Treasury 20+ year bond index, which includes US Treasury bonds with maturities of 20 years or more, and writes call options on the same index to generate income. This strategy provides investors with the opportunity to invest in long-term US Treasury bonds while generating additional income through options trading. And that is what sets TLTW apart from other bond ETFs, its BuyWrite strategy. A BuyWrite strategy involves purchasing a security, in this case, the underlying US Treasury bonds, and simultaneously selling call options on that same security. By selling call options, the fund generates income, which can help offset any declines in the underlying asset value. This approach can potentially provide higher returns than simply holding the underlying asset alone, while also reducing the fund's volatility. TLTW's focus on long-term US Treasury bonds is particularly appealing for investors who are seeking stability and safety in their portfolios. US Treasury bonds are considered one of the safest investments in the world, and the long-term maturity of the bonds provides a hedge against inflation and market volatility. Additionally, the demand for safe haven assets like US Treasury bonds has increased, which has helped to boost their value and the performance of TLTW. Overall, TLTW's combination of US Treasury bonds and the BuyWrite strategy provides a unique approach to generating income while minimizing risk, making it an attractive option for investors seeking a stable and reliable investment opportunity. One of the biggest advantages of investing in TLTW is the stability and safety of the underlying assets. US Treasury bonds have historically offered higher yields than short-term bonds, which can be attractive to investors seeking income. Additionally, the longer maturity of the bonds can provide a hedge against inflation, as the longer the bond's maturity, the more sensitive it is to changes in interest rates. This sensitivity can help protect investors against the negative effects of inflation, making TLTW an attractive option for those seeking a stable and reliable investment opportunity. Like any investment, TLTW does come with risks. One of the main risks is interest rate risk, as rising interest rates can negatively impact bond prices and the fund's overall performance. Another risk is market volatility, as sudden market fluctuations can impact the value of the underlying assets. However, it's important to note that TLTW is designed to provide stability and income, so it may be a good addition to a diversified portfolio. While US Treasury bonds are generally considered to be low-risk investments, there is always the possibility of fluctuations in their value. Additionally, the BuyWrite strategy employed by TLTW may not always be successful in generating income and may result in a loss for the fund. Secondly, TLTW has a relatively high expense ratio compared to other bond ETFs, which can eat into its returns over time. Investors should consider the expense ratio when evaluating the fund's potential returns and weigh it against the potential benefits of the BuyWrite strategy. Lastly, TLTW is heavily concentrated in US Treasury bonds with maturities of 20 years or more, which could limit the fund's diversification and increase its exposure to interest rate risk. If interest rates continue to rise, the value of the fund's underlying assets could decline, potentially leading to a decrease in the fund's performance. While there are risks associated with investing in TLTW, it's important to remember that every investment comes with some level of risk. As with any investment decision, investors should carefully evaluate their individual financial situation and investment objectives before deciding whether TLTW is right for them. It's always a good idea to consult with a financial advisor before making any investment decisions. Despite these potential risks, TLTW can still be a valuable addition to a well-diversified portfolio due to its unique combination of safety, income generation, and long-term investment opportunities. Over the past year, TLTW has delivered strong performance, with a dividend yield of over 19% as of May 2023. Of course, it's important to note that past performance does not guarantee future results, and the price of TLTW can be subject to fluctuations based on changes in market conditions and interest rates. In conclusion, TLTW is an interesting investment opportunity for investors seeking stability and income. While there are risks to consider, the fund's focus on long-term US Treasury bonds and the BuyWrite strategy provide a unique approach to generating income while minimizing risk. That is it for today. Be sure to hit that subscribe and notification buttons so we can see you on the next episode of Dividend Dive.
Hey there, before we end, we want to make sure we're transparent with our listeners, and we want to disclose that the podcaster may own stock in this company. Now we want to make it clear that we're not financial advisors, and this podcast is for educational and entertainment purposes only. We're not making any recommendations to buy or sell any securities. However, we understand the importance of FTC compliance, and we want to let you know that any opinions expressed in this podcast are solely our own and are not influenced by any potential stock ownership. At Dividend Dive, we strive to provide accurate and unbiased information to our listeners. We believe in transparency and integrity, and we want you to have all the information you need to make informed investment decisions. As always, do your own research and consult with a financial advisor before making any investment decisions. Thanks for listening, and let's keep swimming. That's it for today's podcast. Thank you for listening, and be sure to hit that subscribe and notify button. If you have any questions or comments, please leave them in the comments section below. Also, let us know if there is a high-yielding dividend stock you would like us to review. See you next time.